From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 7th, 2018. In today's video, we're going to take a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. Before I begin the analysis, it's important to remember that we do have some news that could affect this currency pair coming up shortly in about 20 minutes from the recording of this video. ADP non-farm employment change out of the U.S., 8:15 Eastern U.S. time, may have an impact on this currency pair, and over the next few days, even going into Thursday, into Friday, we have the BOJ, and of course we also have non-farm payrolls on Friday out of the U.S. So we need to pay attention to some of that news, but I think there could be an intraday opportunity for us today into the support zone. Let's take a look at the chart starting on the daily time frame, going all the way back. The last time we were into this support level, mid 105s, was 2016. So we know it's been a long time since it's been here, and likely to see some support. And over the past few weeks, let's go ahead and zoom it in one time. We've seen a number of times challenging into 105.40, 105.70, the yellow zone at the bottom of the chart, and so far it has been unable to break it. Even though the downtrend has been pretty solid over the past several weeks, it's been unable to penetrate that 105.40 level and continue to pressure down. So as long as it sits on top of it, I don't think right now is a great time to go short on top of that yellow shaded area. You don't want to sell on top of the lowest low that we've seen since 2016. So selling right now, not really an option until or unless it breaks through that barrier of support. It gets through that yellow zone, through 105.40, then maybe that becomes an opportunity. The other opportunity to go short would, of course, be a rally back to the pink zone, the blue trend line. We're not there now, so not an opportunity to go short into the pink zone or under the yellow zone. So if we're not doing that, maybe it becomes an opportunity to look for support and a low-risk opportunity to go long. Let's go ahead and take it on down to the 4-hour time frame, squeeze it out like this, and there we are. There's the first time we settled down here into 105.70, made a pretty decent bounce all the way back up into the 108 level. Then it came back down, settled out for a couple of days here into the 105.40, 105.70 level, bounced back up just over the past couple of days into 106.40 again. Now we're settled out right back here into this yellow zone. And as we can see so far, the market has been unable to penetrate that yellow shaded area, that 105.40, 70 level. So for the day today, as long as it sits on top of it, clearly you don't want to sell it. It's had such a struggle getting through it. The only reason you sell it is if we can see the market get underneath the yellow shaded area. Then it increases our confidence, at least, that we'll look for the continuation lower. What we also want to watch for are signs of reversal. If we see a bullish engulfing candle, or if we see a hammer candlestick, something that implies bullish pressure, that may give us an opportunity as well to take the long, targeting back towards the pink shaded area. So we're watching for signs of support and reversals to go back to the pink zone or higher. And of course, positive ADP non-farm coming up out of the U.S. could be the motivation that causes it to do that. The risk there is that it breaks under the yellow zone. So your stop losses, if you decide to take the long, especially prior to the ADP non-farm data, if you decide to take the long, the stop loss will be underneath the yellow shaded area. That way, if it goes down instead of up, you minimize the impact to your trading account. Lower risk, and your higher reward means that you're targeting back to the pink zone. Of course, if it gets back above the blue trend line, the pink zone at any time, we have the potential of seeing much further profits as it continues to go up. One last thing before we close the video. Fibonacci, highest of the blue trend line down to our most recent low, puts the 236 at the 107.16 level, just underneath the orange zone. Let's take a little bit tighter fib range here. I'm just going to drag this same one from the highest high down to this high right here. That puts the 382 closer to the pink zone. That puts the 50%, 618, all closer to the pink zone. So depending on the range you draw with Fibonacci, we do have some Fibonacci close to or around that pink zone and the orange zone for the US yen for some retracement higher, as long as it doesn't break through our yellow zone at the very bottom of the chart.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.